You keep hearing it, the condo market is crashing. What does that actually mean? What's happening on the ground? What's the real fallout? What's the collateral damage? Because today we're not just saying it's bad, we're showing you how bad it actually is. Right now in the Greater Toronto Area, we got 50 months of condo inventory. Let that sink in. And at the current pace of sales, it will take us 4 years just to sell off what's already built or underway. That's not a slowdown. That's unbelievable. Developers are panicking. Buyers are stalling. Projects are getting canceled left, right, and center. And today we're walking through the real estate ripple effects. What builders are doing to survive. What perks are buyers and renters getting quietly behind the scenes. And how this all plays out in your favor, if you know where to look. I'm Linda, one of the Ragona Sisters, and around here, we keep it real. Make sure to like, share, and subscribe because this isn't what you'll hear in the headlines. We're unpacking exactly what's happening behind the scenes and what it means for you. If you want no fluff insights in plain English, this is the place to be. All right, 50 months of inventory, thousands of units sitting unsold, and developers, they're offering cash, free rents, and even gift cards just to move inventory. Let me show you what that looks like. In just the last 12 months, over 5,000 condo units were canceled in the Greater Toronto Area. New sales dropped 62% year over year. And in some buildings, dozens of units are just sitting untouched, while carrying costs keep piling up. Inventory specifically for Toronto condos, they have nearly doubled year over year, jumping from 3.6 months of inventory to 6.7 months. That's an 89% spike. And in some neighborhoods, condos now make up 60% of all active listings. Resale condo prices, they've dropped 7.3% in May. And get this one, forecasters say we're not done yet. TD Economics say we could see another 10% correction by year end. That means some investors could be facing more than 20% drop in price or in value from what they paid. Coming up, I'll show you the downtown building that went from dead inventory to 70% leased out in 6 weeks. But first, let's talk about what developers are doing to survive, because this is an interesting one. Some are cutting prices by $60,000 if you sign in or if you sign up within a week. Others are offering free parking, 2 years of free maintenance fees, and waived assignment fees. One project, free Wi-Fi, rent guarantees, and $1,000 and food delivery credits. You literally can eat for free just for leasing. And investors, this is a big one. Instead of 20% deposit, developers are offering custom payment plans. I haven't seen this in a while. Think $5,000 every 3 months instead of dropping a huge chunk up front like $20,000 every 30 days. That's flexibility worth thousands in a market like this. One developer in Vaughan, they pivoted their entire project from investor focus to end user focused. They rebranded, they redesigned, and they added new layouts, added bigger kitchens and bigger spaces. They leaned into rental guarantees as well, and 70% of the units are now leased out in just over 1 month. By the way, the days of little shoebox condos flying off the shelves, they're gone. Nobody wants them anymore. Developers are scrapping micro suites and redesigning them for livability, bigger floor plans, more storage, and spaces people can actually live in, not just hang their coat. And they're not alone. Now let's talk about investor fallout. In 2023, about 52% of Toronto condo investors were cash flow negative. If you think that's bad, check this out. In mid-2024, that number jumped to 81%. The average loss is $597 a month. Some units, they're actually losing more, up to $866 a month. Studio condos occasionally break even, but anything larger, it's bleeding money. I spoke with one landlord last week. He's got one bedroom in the city. His tenant pays $2,300 a month. His mortgage, condo fees, they're $2,900. He has to cover $600 out of pocket a month. He said, I thought I was buying passive income. Turns out I just bought stress and more debt. He had to get a part-time job to cover that extra expense. Another couple I know bought a pre-construction in 2021. This is a common story. The unit closes this fall and the same floor plan is now listed $50,000 cheaper in the resale market. That means their equity is gone before they even moved in. Now that's a stinger. Here's some other data. In January of 2025, condo inventory hit 7.8 months, a 7-year high. And in the Greater Toronto Area, housing starts are down 65 to 68% year over year. Builders aren't just slowing down, they're pulling out. Over 31,000 condo units are set to complete by 2025, but who's going to buy them? Later, I'll show you which buyers still have the upside in this market and which ones need to wait. Don't scroll away yet. Here's where buyer psychology kicks in. The old fear of missing out is completely gone. Now people have a new fear of getting in. Buyers are asking, what if prices drop more? What if I can't refinance next year? That's a big one. And what if this unit sits half empty like the ones across the street? And it's not just everyday buyers. Even institutional investors are tapping the brakes. Private lenders demanding 8% rates just to take on a meeting. Some condos have become way too risky. But here's the hope, if you know how to play it. This one client, she was renting a 1-bedroom Liberty Village condo, watching the market for years. She had saved, she waited, she did all the right things. Everyone told her buy pre-construction, it will appreciate before you move in. You know, she was one of those frequent researchers. She always read up on the housing market and she watched the variables. She was always calling us to see how the market was doing for that particular month. So with all the data that she compiled, she decided to hold off buying, although she was close to buying something just 2 years ago. But she decided, I'm going to continue renting. So now the resale market has come down and she found an identical floor plan to the one that she was looking at 2 years ago, pre-construction. And the kicker is, same location, identical layout, better building with better amenities, and she got it for $80,000 less than what it was going for 2 years ago. She's moving in 2 weeks. She couldn't be happier. She didn't chase the dream. She didn't chase the hype. She chased the numbers. And now she's in control. So buyers, you have leverage, you have choice, you can negotiate. Closing costs, parking, locker, even upgrades. 2 years ago, many would have laughed to hear that mere thought of negotiating with the seller. If you're renting, push for free months, ask for storage, negotiate rent or incentives. You're not a bystander, you have power too. And if you're an investor, the truth is, yes, cash flow is tight. Yes, risk is higher, but if you look in the right places, there's some really good deals hiding in plain sight. Here's the bottom line. This isn't just a condo crash. It's a full-on market reset. It's like somebody hit the reset button and all those 2022 hype prices, they're gone. This is a correction that's washing out speculation, fluff, and bad math. And that's a good thing. Because when the dust settles, the serious buyers remain. The smart money steps in. And that's where opportunity lives. Next video, We're breaking down the worst crime-riddled areas to live in and which areas you really need to stay away from. That's going to be a good one. If this information helped you, hit subscribe. It helps more than you know. Thanks so much for watching this, and we'll see you in the next one.